Welcome back to Alpha Recap, your aftermarket wrap from stockalpha.ai. We're diving into the biggest headlines from today's session. And, as always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. Lots to unpack after the close.
Let's jump right in with the biggest story. Nvidia delivered a blowout quarter. The company reported roughly $26 billion in revenue, and get this, about $24 billion of that came from data center sales. That really dominated the tape tonight.
I mean, when you step back and look at this, Nvidia basically doubled down on its role in AI training and inference infrastructure. Analysts noted sustained enterprise orders and cloud deployments, and that was the tone across the sector.
After the print, we saw Nvidia move higher in after-hours trading. But during the day, it did have a little wobble. It pulled back down about 0.75% at one point, trading around $220.61 on heavy volume.
Right. And interestingly, Intel traded up about 2.5% to around $110.80, which suggests some rotation into other chip names as flows chased the AI story.
So, what really stands out here is that this quarter seemed to cement Nvidia's leadership in AI. But it also raised the bar for future quarters. Analysts are going to be watching follow-through volume and how expectations adjust.
Right. And the other thing is margins and architecture moves. Durable demand supports the narrative, but forward multiples already price in a lot of growth. Any pricing or competitive changes from rivals could pressure margins over time.
Short reaction. Big move in semiconductors today.
Yeah, that tracks.
Switching gears to healthcare. Medtronic announced it intends to acquire SPR Therapeutics, which adds temporary peripheral nerve stimulation technology to its neuromodulation portfolio.
That's a classic bolt-on play. It expands Medtronic's addressable market in chronic pain and gives the company earlier stage therapy options to cross-sell into established channels.
Analysts flagged integration risk, things like accretion or dilution, regulatory timing, and near-term margin pressure as the company scales training, distribution, and commercialization.
Exactly. These kinds of deals accelerate growth, but they're not free. Market participants will watch the regulatory timeline and the expected close date, and of course, any commentary on synergies.
Short reaction, sensible strategic fit.
Not what anyone expected to be the headline, but it makes strategic sense.
Turning to regulatory and compliance themes. Morgan Stanley has moved to issue separate phones for China travel and asked some bankers to carry separate devices. And that story stuck out today.
So, what really stands out here is the tangible cost of cross-border oversight. Analysts and operations teams flagged higher compliance and security expenses tied to regional rules.
Yeah, this is one of those stories where the headline is small, but the operational impact can be large over time. Device programs, training, audits, they all add up.
Analysts see two patterns here. Firms with global footprints are facing incremental operating friction, and that can show up as near-term expenses and longer-term process changes.
Quick aside, Google's UK situation was another regulatory flashpoint. The company refused formal union recognition, but offered conciliation, which is going to keep labor relations in focus for big tech.
And in parallel, Sportradar is facing a securities fraud class action with a claims deadline of July 17th, 2026. Which could concentrate volatility if litigation moves faster.
Small reaction. Legal risk can surprise markets.
Honestly, I was a bit surprised by this one.
Let's hit a few other notable items from today. Insider moves and governance signals. Hershey Trust disclosed a trustee sale of about $5.75 million of Hershey stock. And PayPal's president sold roughly $183,900 worth of shares.
Those are the kind of filings that can nudge short-term supply and sentiment. Analysts usually caution against reading too much into a single sale, but clustered insider activity would be something to watch.
On the events and consumer side, Major League Volleyball reported nearly 3 million unique viewers and a sold-out championship weekend. That's a nice data point for sponsorship and media discussions.
Yeah, sports viewership and trade show momentum can translate into sponsorship dollars for companies with exposure. And we saw the Global Gaming Expo return as another sign of that marketing lift.
Switching to real estate and industrial tech, a few interesting moves. Maryland Incubators launched a program called Nexus to boost founder support. Southern Land Company launched a mortgage arm called SLC Lending, and a market study projects the process automation and instrumentation market could double to about $2 billion by 2035.
Those are longer-run ecosystem plays. Incubators feeding deal flow, real estate firms vertically integrating services, and industrial automation quietly growing over the next decade. It's the sort of background runway investors and strategists keep an eye on.
Volume and volatility were big today too. Inverse and leveraged ETFs showed outsized flows. One inverse small cap ETF jumped over 3% on very high volume, and microcap names posted heavy turnover.
Retail flows and ETF rebalancings continue to amplify intraday moves. That creates both execution challenges for big orders and fast-moving opportunities for traders. But it also raises intraday risk.
Quick reaction. Heavy liquidity makes price action choppy.
Big move.
Before we wrap, a quick checklist of what to watch next. Analyst revisions after Nvidia and Medtronic headlines. Follow-through volume in Nvidia and Intel. Any additional detail from Morgan Stanley on the device program. Sport radar docket developments. And any follow-up SEC filings from Hershey and PayPal.
And for traders, keep an eye on volume trends in leveraged ETFs and microcaps. Those flows were driving a lot of the intraday action today.
So, what really stands out here is that AI continues to concentrate market leadership. Compliance and geopolitics are adding operating friction, and retail flows are amplifying volatility.
Analysts note the pattern. Winners in AI infrastructure are driving sector flows, but rising regulatory and compliance costs are real. And events and viewership trends are back on the radar for monetization.
Final quick takeaways. Nvidia's blowout quarter reinforced the AI infrastructure narrative. Medtronic's deal shows medtech consolidation for growth, and firms with cross-border footprints are visibly stepping up compliance measures.
Data suggests momentum is strong, but forward expectations are lofty, and that means markets will be sensitive to execution, margins, and regulatory noise.
A quick reminder, this episode is for informational purposes only. We're not offering personalized investment advice or recommending any buy, sell, or hold actions. Analysts note trends and data that may inform research and risk management.
Thanks for listening. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
That's it for this episode of Alpha Recap. See you next time after the close. And don't forget, stockalpha.ai is where you can ask questions and dig deeper. Take care.